Money shaped history long before nations were formed. Around 3000 BCE, Sumerian temples and palaces stored grain and silver, issuing loans recorded on clay tablets. These records defined interest, collateral, and repayment dates. In Babylon, the Code of Hammurabi legally enforced lending rules, setting fixed interest rates for silver and grain. In ancient Egypt, state granaries functioned as financial centers, redistributing wealth through taxation and storage. In classical Greece, trapezitai operated as private bankers, exchanging currency, safeguarding deposits, and funding maritime trade across the Mediterranean. In Rome, argentari and mensari managed accounts, extended credit and settled transactions for merchants and the state, supporting imperial expansion through finance. After Rome, European trade revived through merchant banking. In medieval Italy, cities like Florence, Genoa, and Venice became financial capitals. The Medici Bank perfected branch banking, foreign exchange, and double-entry bookkeeping, allowing precise control over profit and loss. In 1407, the Bank of St. George in Genoa managed public debt, marking early institutional banking. In 1602, the Dutch East India Company introduced permanent share ownership, transforming investment into a transferable asset. The Amsterdam Stock Exchange created continuous price discovery, liquidity, and investor participation. In 1694, the Bank of England centralized government borrowing, stabilizing national finance through long-term debt instruments. During the 18th century, joint stock companies expanded across Europe, pooling capital for trade, mining, and infrastructure. The Industrial Revolution relied on banks to convert savings into factories, canals, and railways. Bonds financed governments, while equity financed production. In the 19th century, investment banks organized capital for steel, shipping, and rail networks, linking markets across continents. Central banks emerged to control currency issuance and protect financial stability. Across centuries, wealth followed systems, not chance. Contracts created trust, banks organized capital, investment multiplied reach, business transformed money into lasting influence. History records one constant truth: financial structure determined economic power, and economic power shaped the world.